Hello, and welcome to Global Data Themes Instant Insights. At Global Data, we define a theme as something that keeps a CEO awake at night, as businesses that invest in important themes will succeed, and those that don't will fail. Hello, and welcome to Instant Insights. I'm Emma Taylor, and today I'll be talking to Stephen Blitz, the Chief US Economist at TS Lombard, a leading independent investment research provider focusing on global macro and strategy. Hi, Steve. Thanks for talking to me today. How are you?
Greetings from sunny Southern California.
You're on the West Coast.
Both my sons live in Los Angeles, so I'm here visiting them and spending time. I'm in their side bedroom here.
Well, thank you so much for taking the time. Let's get into it. So we've just had the midterm election results. What
Yes.
what kind of role do you think the US economy played there?
Interestingly, less than I would have thought, right? So typically in a US election, it's always economy first, global issues second, and then social issues third. But it got upended. The Democrats were able to hold the Senate, and in the House, the Republicans got the majority, but it's going to be a very difficult majority for McCarthy to lead.
I mean, yeah, so they were expecting this sort of red wave.
Yeah, they expected red wave because Biden remains very unpopular.
Mm,
So he only has an approval rating of about 35%. But
mm.
what this midterm election proved is that you could not like the leader of the party, but there could still be big enough issues on the ballot that could make people vote in favor of the president's party. I think that what happened here was there were just other bigger issues
Mm.
that superseded the the president's popularity. So people on issues like abortion, voting rights, and then just people who want to usurp, have the ability, if they became elected, to usurp the democratic process. Biden said democracy is on the ballot, and he
Yeah.
had people voting. And you know what? That you could argue that that worked.
Aside from these sort of like other issues that, yeah, you say sort of like usurped the midterms, where do you think Joe Biden and the Fed are sort of steering the US economy? Where is it? How do you think they're doing? Are they steering it in the right direction?
Well, that's a great question, and that's why you have the job that you have, because you ask great questions. I would answer it this way. I think it's a little bit. It's kind of like figuring out how to steer the Titanic after you hit the iceberg. He overpromised, and then the Fed kept rates too low for too long.
Right.
Some make the case that Powell was up because he was up for renomination at the end of 21, that he purposely did not tighten sooner because of that. That's what we call urban legend now. So anyway, but whatever the motivation was, he was wrong. Looking forward, I think there's two ways to think about the economy. Um, and I choose to think of a more benign way to look at it, right? Which is that the economy had this huge 6% growth in 2021. And the US economy just is not primed to grow at that pace. And so it decelerated last year. And in that deceleration, there were some winners and a lot more losers, housing being a big one, the Fed raising rates. And so through that deceleration, there's a lot of misreading of economic statistics.
Because it wasn't
But
like
the
real
one,
growth
right, it
in
was
the
this
yeah.
pumped up, it was like this, it was like having a sugar high,
Mm.
right, or getting like just drunk. And then all of a sudden, at some point in the middle of the evening, you stop drinking and then you just crash, right, from that. And the whole up and down was a created event.
Mm.
And who you are underneath that hasn't really changed, except maybe you'll say, I won't drink like that again. And hopefully that'll be, and hopefully that'll be part of the narrative that the Fed won't do that again. Um,
Until next
so,
Friday.
so that's right. on Thursday. Um, but the thing is that the Fed, and thinking about policy going forward, what it's also found though is that there's a structural imbalance in the labor market. So anyway, the point is that the Fed has to slow demand and it has to raise interest rates. Now, I find it funny when people say, well, where are they going to stop? What's the terminal rate? Right.
Yeah.
So history is that the Fed keeps going until the economy hits a recession.
Yeah.
And then they realize they went too far and then they go back. So, what's that top rate? I'll say 5.25, 5.5, something like that is probably as high as I think they're going to go, but it's
Right.
by no means set in
And
stone.
and you think that's imminent? Those hikes?
Well, I think they're going to go 75 in December. I've said that all along. I know that
Mm-hmm.
the market a week ago was all excited and it's still sort of pricing in that they're just going to do 50 in December. And we've gotten some strong economic data since then. We have another inflation and employment number to come out in December before their mid-December meeting. And Powell even told you that, well, told you, me, everybody, in that at the press conference when he said, well, we're going to discuss at the next meeting, meaning the December meeting, we're going to discuss slowing down. And the way the Fed works, if they're going to discuss it in December, that means they'll do it in February.
Right.
Assuming that the data, continues to roll in this direction everybody anticipates it's going to go.
And when do you think, that recession will hit? I mean, Bloomberg, I think they said today or yesterday, they announced that they forecast a recession is almost within 100% certainty within a year. What's your prediction there?
Yes. If you're going to forecast often. I think you'll probably be in recession by the second quarter, is my guess. And I think it's a mild recession. It'll last 2 quarters, the second and third quarter. We still don't know yet really see yet what's really going to just drive it down. And that's part of the problem. Normally, the way cycles work, right? You have an extended period of growth. Everybody gets excited. Everyone thinks growth is going to keep going. Money seems cheap. So firms build up inventory and firms borrow money to build inventory. They borrow money to build machines or whatever they need to, or even just finance hiring more workers. And what happens is that the Fed starts to raise rates, the curve inverts. Inversion means that the short-term interest rates are above longer-term interest rates, which means that you're getting paid more to not take risk than to take risk. So on the margin, people say, all right, I'm not going to take risk. And that's what happens. So credit, the availability of funds for people to borrow shrinks or stops growing as rapidly. And all of a sudden, so people stop spending as much, and then all of a sudden businesses find themselves with too much inventory on hand, and they want to turn that inventory into cash, so they cut prices and they sell that stuff out, but then they cut how much they're going to order to replace the inventory. This cycle, though, is very different. So we've had an asset cycle. All right. So after the 08-09 recession, we really didn't get that credit build up. In fact, both businesses and households are less levered than they were then. We don't have an inventory problem. But the point is that money now has a price. Right. And once money has a price, that means it has, once anything has a price, it means there's a scarcity of value. And so hence you have to make choices in terms of who you're going to lend that money to and whether or not you're going to borrow that money. And so you are seeing a lot of layoffs in the tech sector, and that's beginning to shrink, and other sectors as well. So I think you don't get some big dramatic 2008 type recession, but you get a recession. And, I hate to downplay it verbally because if you're the one who loses your job, it's it's a depression, not a recession.
Yeah, really, it affects real people. Well, thank you so much, Steve Blitz, for those instant insights. Thanks for talking to us. Thanks for listening, and from us in Thematic Intelligence, see you next time.